Welcome back to Money Hack Japan. Today, we're diving deep into the current market trends that savvy investors can't afford to ignore. So, grab your coffee and let's get started. As we sit in this rainy Tokyo cafe, let's use this ambiance to focus on the data that matters. The market has shown some interesting shifts recently, particularly in the tech and renewable energy sectors. But why are these sectors gaining traction right now? First, let's take a look at the tech sector. Over the past year, we've seen a significant increase in artificial intelligence adoption across various industries. According to a report from McKinsey, companies that have implemented AI have seen productivity increases of up to 40%. This trend is driving investment into tech stocks, particularly those involved in AI technology. Now, let's analyze some key players. Companies like Nvidia and Alphabet have demonstrated substantial growth, with Nvidia's stock price surging over 200% in the last 12 months. If you're considering entering this space, keep an eye on earnings reports and guidance from these companies. The upcoming Q1 2024 earnings season will be crucial for assessing how these businesses are navigating their AI strategies. Next, let's move on to the renewable energy sector. With global climate initiatives gaining momentum, investments in renewable energy sources are skyrocketing. The International Energy Agency reported that global renewable energy capacity is expected to grow by 50% by 2025. This is not just a trend, it's a fundamental shift in how we view energy. Companies like NextEra Energy and Enphase Energy are at the forefront of this transition. NextEra's recent quarterly earnings showcased a 20% increase in clean energy output compared to last year. If you're considering diversifying your portfolio, these stocks may offer solid long-term growth potential. Now let's talk about the macroeconomic climate. Inflation has been a hot topic, with central banks around the world tightening monetary policy. In Japan, the Bank of Japan has maintained its accommodative stance, but is showing signs of potential rate hikes in the near future. This could impact both domestic and international investments. Consider how interest rates affect your investment choices, particularly in the bond market, where yields are set to rise. Additionally, pay attention to geopolitical risks. The ongoing tensions in Eastern Europe and the South China Sea could disrupt supply chains, particularly in the tech sector. This is where risk management becomes crucial. Diversifying your investments can help mitigate potential losses from these external factors. So, how do you position yourself in this evolving landscape? First, consider sector rotation. As investors shift their focus from growth to value stocks, look for opportunities in sectors that have underperformed in the past year. Financials and industrials could see a resurgence as economic recovery continues. Moreover, don't overlook the importance of dividends. Companies with strong dividend histories tend to be more resilient during market downturns. Look for dividend aristocrats, companies that have consistently increased their dividends for 25 years or more. This strategy can provide a steady income stream while you wait for capital appreciation. As we wrap up today's analysis, remember that staying informed is key. Subscribe to financial news outlets, follow market analysts on social media, and participate in investment forums. Engaging with a community of investors can provide insights that you might not find elsewhere. In conclusion, the current market landscape presents both challenges and opportunities. By focusing on sectors poised for growth, understanding macroeconomic factors, and employing risk management strategies, you can enhance your investment approach. Thank you for joining me today in this rainy Tokyo cafe ambiance. If you found this video helpful, please give it a thumbs up and subscribe.